You waited for the perfect setup. Price held above the VWAP, volume kicked in, and the trend looked strong. You bought the breakout and got trapped at the high. That's not a fluke. It's what happens when price and the VWAP stop agreeing. The VWAP tells you fair value, but it doesn't tell you when price is moving in the opposite direction, a key sign that momentum and value are starting to diverge. That's where divergence comes in, and once you know how to spot them, everything changes. Most traders use the VWAP to confirm trend direction or spot mean reversion setups, but what they miss is that price and the VWAP don't always agree, and when they start to pull apart, that's where the edge is. A VWAP divergence happens when price is pushing in one direction, but the VWAP is quietly drifting the other way. It's a clean sign that the move might not be what it looks like. The VWAP divergence indicator automatically spots those moments when fair value and price don't match. It filters out noise, detects when momentum and value are out of sync, and marks potential reversals directly on your chart. In this video, we'll break down what the VWAP really shows you, how to read divergences the right way, and how to start using the indicator across any market or time frame. If you want to follow along or add it to your chart, the link's in the description. It's completely free. VWAP stands for volume weighted average price. It calculates the average price of an asset, weighting each candle based on the volume driving it. That means price levels with the most activity, the ones real buyers and sellers care about, have the most influence. Most traders use the VWAP as a kind of dynamic fair value line. When price is trading above the VWAP, it suggests buyers are willing to pay a premium. When price is below it, sellers are in control and buyers aren't stepping in. That's why it's often used to confirm trends. If price is trending up and holding above the VWAP, it's seen as strong. If price breaks down and stays under the VWAP, it's seen as weak, but the VWAP isn't predictive. It moves with the market, recalculating on every new candle. So if volume shifts, the VWAP shifts with it. That makes it useful, but it also means it's limited. Because if you're only watching price in relation to the VWAP, you're missing what happens when the two start to move in opposite directions. That's where divergence comes in. The VWAP is supposed to show you where fair value is, based on what buyers and sellers have actually done. So when price is trending in one direction and the VWAP is moving with it, the move is usually healthy. But that's not always what happens. Sometimes price pushes higher, but the VWAP starts to flatten or even drift lower. Other times, price breaks down, but the VWAP starts creeping up. That disconnect between price and value is a divergence. And it's a signal that the move might be running out of steam. Because if price is rising but volume isn't supporting it, or if sellers are in control on the chart but the VWAP says otherwise, it usually means momentum is fading and a reversal is possible. You won't always spot that just by watching candles, and by the time it's obvious, it's usually too late. That's why divergence matters. It shows you when the market is out of sync and gives you a chance to get positioned before everyone else sees it. The VWAP divergence indicator is built to spot these divergences, but it does a lot more behind the scenes than just comparing two lines. It starts by detecting directional disagreement. Is price pushing up while the VWAP is sloping down, or is price selling off while the VWAP is starting to rise? That's the first sign of divergence, but on its own, it's not enough. To avoid false signals, the indicator applies several filters. It measures how far price has moved over a set number of candles, the default is 5, and checks if that move is strong enough using the ATR, or average true range. It also scans for gaps and automatically discards any signal that forms during unusual or illiquid price action. There's a built-in cooldown to avoid clutter. You won't see a cluster of dots in one trend unless each divergence is confirmed with fresh context. When all these conditions align, the indicator plots a dot on your chart. Red dots for bearish divergences when price is rising, but the VWAP is falling, and green dots for bullish divergences when price is falling, but the VWAP is rising. You can customize how the indicator behaves, change the lookback period, ATR sensitivity, dot size, and even enable alerts so you're notified the moment a valid divergence forms. The indicator also supports anchored VWAPs. You can tie the calculation to the session, week, month, or even events like earnings, dividends, or splits. It works on any market, across any time frame, and adapts to your strategy without needing to constantly change settings. It's not about calling tops or bottoms. It's about showing you when price and fair value are breaking apart so you can catch the disconnect before it turns into a reversal. If you want to grab this indicator for completely free, it's available on TradingView. Just click the link in the description. And if you want more indicators that help you filter out noise and become a better trader, join our free Discord. We've got tons of setups, walkthroughs, and a community of over 15,000 traders that actually help each other. If you found this video helpful, drop a like, leave a comment, and subscribe for more breakdowns like this. Thanks for watching, and we'll see you in the next one.